Hello and welcome to Mining Network. We're joined today by Stephen Forrest, Executive Chairman of SFA Oxford, one of the leading authorities on platinum group metals and battery metals, as well as research into the hydrogen economy, which is looking pretty exciting too. And I'm running thinking there's a bit of crossover in a lot of these groups anyway, in terms of the demand forecasts. So today we will be talking about palladium. We saw a really good rally at the beginning of the year, with prices almost hitting the $3,000 per ounce mark back in March. We've since seen a contraction of around $1,000 to date. Stephen, what's been the main cause of this?
Okay, well, good morning, good afternoon, good evening, wherever you may be in the world. It's a great pleasure to be here, and what a fascinating market we're in. We have seen a significant increase in platinum group metal prices, and including palladium in particular, as a result of supply chain difficulties. And this really emanates from a couple of events. Normally, when you have supply side events, prices tend to move up. But the supply side events that we've had during the end of 2019 through 2020 have been pretty significant. And that's been really a combination of smelter difficulties at the Anglo-American platinum operation, the ACP converter units, where it resulted in a complete refurbishment of both the streams, their backup stream as well as their main stream. There's two streams, A stream and B stream. And in addition to that, and that locked up metal quite significantly in front of the smelter. So the refineries basically offered metal out until the metallurgical pipeline had become sort of drained. This impact, on top of the outbreak of COVID, and the lockdown that happened industry-wide, nationwide in South Africa, who is a significant producer of platinum group metals around the world, even in palladium terms, well over 2.5 to 3 million ounces, meant that supply shortages occurred and lease rates increased and metal prices moved up. In early 2021, we had further supply issues with the flooding of Oktябрьский and Tymyrsky mine in Russia, which has also delayed production in two mines, which constitute probably more than 65% of Norilsk PGM output. And their pipeline is probably, metallurgical pipeline is probably somewhere in the region of about 6 months. So when you start to drain pipelines, they have to fill up again, and the same in South Africa. So these supply events have drained pipelines, and they've also been delayed by the building up of a pipeline before normal production levels are restored. So supply events has been the main cause. Similarly, demand has been pretty strong as a result of an increasing rollout of tailpipe emission standards and a recovery in the auto sector, particularly post-COVID as well. So the combination of this recovery, increasing standards, higher loadings, recovered China, this has all contributed to the regime increase in prices. And now with the metal price coming off quite considerably, as you mentioned, this has really been the result of a supply chain hiccup that's occurred in the auto sector, where semiconductor chips have basically resulted in a reduction in automotive demand. And this has basically impacted the palladium price in particular.
And with the semiconductor chips, have SFA Oxford done any research into how long this may go on for in terms of reducing auto demand, or is there Is there some good news on the horizon, maybe into next year? I saw Elon Musk talking about that there are more production facilities coming online. Is that something that you've seen yourself?
Yeah, well, we make use of projections of vehicles, and we measure the impact of semiconductor chip fallout from data that we receive from our partners in Oxford, LMC Auto. And they have been revising down recently their projections of what the impact would be. So for 2021, we think production volumes have dropped probably somewhere in the region of about 6 to 7 million vehicles. That's all powertrains in that number. And next year, those revisions are moving towards a similar number, maybe 4 million to 6 million vehicles again in 2022. So those impacts are really very significant for palladium, where, sort of 70 to 80% of palladium demand is in the auto sector.
On the supply side, then, obviously, a lot of what we saw in terms of higher prices you were mentioning was really issues in Anglo-American and also at one of the largest mines in Russia. And that with the demand that we saw from the automotive industry increase the prices. If we're looking here into next year, still having these demand issues, surely we're not going to be looking at sort of palladium prices that were back up to sort of 3,000 or nearing 3,000 next year then? Or what's your view on that?
Yeah, you've got to remember that the price elevation that we achieved in 2020 into 2021 was really as a result of supply chain and logistical issues. I mean, you had a lockdown of airspace in South Africa, which prevented planes from flying metal to other parts of the world. So the prices were really exaggerated to the upside. I think if you look over history, in the last decade, you will see that today's price of palladium at sort of 1,800 to 1,900 is a very good price. But to be something like $3,000, I don't think is fair value on that respect. Similarly, in the case of rhodium, which was a market which is, very South Africa centric. I mean, we saw prices move from sort of 3,000 to 5,000 up to $30,000. Again, this was logistical and a supply problem, all associated with the difficulties in South Africa and exacerbated slightly in the case of rhodium with difficulties in Russia. They're a very small producer of rhodium, but nevertheless, in a very small market of 1 million ounces, significant.
And in terms of looking a bit more further forward, one of the main talking points with platinum group metals being so closely tied to the catalytic converters is that when we have EV sales come through and this substitution from petrol and diesel powered vehicles and we move more to electric based economy, obviously the demand for these type of metals are going to decrease. One of the things I wanted to ask you was, do you have a forecast of when that meaningful demand shift may occur? Are we anywhere near that at the moment?
No, we're nowhere near it. And, you've got to remember that the revisions that you've seen in battery electric vehicles really start to take impact sort of around 2030 and beyond, where you start to see the peak of palladium. So peak palladium demand in absolute terms is probably 2027 to 2030 in that region. What people are missing in this market is there is still tightening legislation coming, Euro 7, and indeed, there are significant capacity constraints, particularly in the reticulation of power to a fleet of electric vehicles. Now, there's no question that the penetration of electric vehicles has been much higher than perhaps we might have estimated 2 or 3 years ago for this year and for next year. And as the world starts to adopt a greater level of consciousness regarding emissions generally, CO2, climate change, etc., of course, battery electric vehicles are going to have a place. So I think Palladium has got pretty good story fundamentally. And of course, another reason why the Palladium price has been a little bit softer, but the market nevertheless still in deficit, I might add, next year, has been a result of the substitution that we've seen away from palladium to platinum in some trimetal catalysts. A palladium price of 1,800, even with the substitutions, is a very good price when the market remains in deficit. You don't need to have a price of $3,000. I mean, that's just not going to happen.
Okay. Although I'm sure many mining companies are still wishing for that. Let's move on to hydrogen, because I know it's been more linked with platinum, but if we are going to see, you're talking about future peaks of palladium around the late 2020s, which is good. So we've still got quite a few years left of that being a relevant and strong market by the sounds of it. In terms of this hydrogen economy, how much credit do you give to this in terms of actually needing palladium in the production or even in the fuel cells? Because I know a lot of it's linked to platinum, but could we see a scenario where if the prices level out between platinum and palladium in the future, that we will see substitution into palladium, or is it just too expensive for that even to be considered at the moment?
I'm not sure about the substitution possibilities for palladium in fuel cells. What I feel people misread here is really and truly, we are in a surplus market for platinum and have been for 6 or 7 years. So the platinum price in real terms is probably cheap in that respect. Of course, platinum is important and has a very strong role in both electrolysis and in fuel cells. But there are mission critical metals, because we are not going to achieve the sort of penetration rates that most people think will happen by 2030 unless we have regular supply of ruthenium for fuel cells and iridium for electrolyzers. They're the mission critical metals. And I feel most people's hydrogen projections are very ambitious in platinum terms, because you need these mission critical metals to enable them. It's a case of economics, and it's a case of the economics of hydrogen being attractive too. Now, green hydrogen will need renewables to achieve that, and that's not a big inhibiting factor to the penetration of fuel cells, but because you can use any hydrogen, but then you're going to need a hell of a lot of ruthenium, because the fuel quality won't be as pure as green hydrogen would be. So it's also about the chemistry of the hydrogen and any contaminants that might require higher loadings of ruthenium in the proton exchange membrane for a fuel cell. And similarly, we need quite a significant amount of iridium for electrolyzers to operate, to manufacture the hydrogen.
Just quickly on ruthenium, I assume, and euphorium, they're both, I assume, mainly produced in South Africa and Russia, similar to the other platinum group metals, are they?
Yes, indeed, yeah. The ruthenium market, actually, the volumes are bigger than rhodium. People don't quite realize that. So that's, and of course, they all have substantial end uses in their own right. Those markets have also moved up quite significantly. So there's a synchronicity, if you like, in the increase of these PGM prices, and they've all come off recently too.
Okay. Moving back to palladium, something that we have heard is that Pallinghurst are working on something named the Kell process, and it's essentially something that could revolutionize the production of palladium in terms of reducing costs. Have you heard much about it? And could you give us any insight whatsoever in terms of how far away this might be and what its consequences might be?
The Kell process is being pretty well researched, and it's a technology that's now been rolled out by Pallinghurst and their projects in South Africa. It's yet proven in scale, and we're watching it with a very keen eye. It has advantages with respect to an environmental footprint compared to very sulfurous emissions that come out of smelters in South Africa and elsewhere in the world, in Russia. But it's pretty much South African-centric technology, maybe into Zimbabwe at a later stage. But I think it's a little bit early days to suggest that it is going to impact the palladium price, for that matter.
Okay, and going on to the price finally, do SFA Oxford have any forecasts on what the price may be up to in the next 5 to 10 years or so?
We see quite a robust outlook for platinum group metals. We think platinum will be trading in a range between 1,000 and about 1,400 over the next 5 years. And in the case of palladium, we think it's going to trade in a range of probably 1,800 down to about 1,400, maybe even 1,200. But very much dependent, nearby, up front, we should expect to see, when the chip limitations play out, we expect to see, some pent-up demand coming through, which would lift the price up maybe a couple of $100. And in the case of rhodium, we think the prices will go sideways around $8,000 for 3 or 4 years, and then probably calm. But the rhodium market's in deficit for some time. Around 5,000 to 8,000 as a range is probably quite a good range for 5 to 10 years.
Brilliant. Well, Stephen, thank you so much for your time. For anyone interested in finding out a bit more about Platinum Group Metals, I'll be putting links in the descriptions below to SFA Oxford, their events and their research. Stephen, thank you so much.